Hey everyone, it's PK here. In this video I'm going to talk about how I just got a $7,000 pay rise in property investing. Okay, so that's the great thing about investing in property. You can get pay rises at will, and I'm going to talk to you about that in this video. So once again, my name's PK. I help people buy investment properties that have high growth, high income, positive cash flow, that get passive income right now without spending $15,000 on a buyer's agent, without spending their weekends at inspections, and also without spending weeks or months on mainstream websites doing research like CoreLogic or realestate.com. But let's get into this video. So what I've just done basically across the majority of my portfolio is that rents have risen by about $20 to $25 across almost every single property. Of course, they're not all coming up for tenant renewal, or the rental expiry date isn't the exact same time. But from now, which is when some of the first properties that I have, their leases are up to, in the next 3 months, across the board, in the next 3 months, I will get myself a $7,250 pay rise. So how does that happen? Pretty simple. And even I was surprised by this, and this really isn't to brag or anything. Any property investor who's done well, who's followed the data and has bought good assets, will be achieving this exact same result in a higher quantity. Plenty of people more successful than me, or a lower quantity, someone who's just working into property, just getting started. So how that works is that I've bought all of my properties in areas that are actually not only going up in value, but more importantly, in a way, especially for passive income, rents are increasing. Okay, so like just 2 weeks ago, one of the tenants in my North Brisbane property, they issued a letter to vacate, so they're going to go in January. And it's really sad to lose them, actually, because they've been my tenants there for 5 years. So initially I was a little bit circumspect. I was thinking, am I going to get a week's worth of vacancy, even though the vacancy rate's almost nothing? It's always a little bit, not stressful, but a little bit, how quickly am I going to get the next tenant? But then my property manager got on the phone with me and said that even though we're getting $405 a week rent right now, actually the market demands $425. So regardless of whether they would have stayed or whether they would have left, we're going to get an increase in rent. And that's the case for all of my Tasmania properties. That's the case for Newcastle. That's the case for Adelaide. That's the case here in Brisbane. Everywhere rents are increasing. And if you're a property investor, as long as you haven't bought apartments, as long as you've bought in good suburbs, that matches all the data that I teach, you'll be getting this exact same result. People think that because of COVID, rents have been slashed, and that is definitely the case. In inner city apartments, places like Docklands, inner city Melbourne, all the way out to sort of South Yarra. In Brisbane, from sort of Wollongabba all the way sort of on the north side to about Albion, Bowen Hills. In Sydney, all the way north side, St Leonard's, Crow's Nest, down south to some extent to about Surrey Hills, but we're talking apartments and units here. And I'm not going to go around the country, but in general, units, apartments within the sort of 3K, 5K radius of the major capital cities have done terribly. So unless you have bought there, you should be expecting a rent rise in the next 3 to 6 months, regardless of whether you have a tenant there or don't. Of course, it all depends on the type of property you've bought, all depends on the specific type of suburb. But if you've done well in your initial property selection a year ago, 5 years ago, 10 years ago, you should be expecting a rent rise. And when you have multiple properties, like, for me, it's more than half a dozen assets, then every time the rents increase by $15, $20, $25 a year, that's like $5,000 to $10,000 of increase in passive income. My own portfolio is well under 40% LVR. So, any incremental rent is really just going into my bank, and I'm unfortunately paying tax on it. So that kind of sucks. But the point here is that property investment is, in my opinion, for 95% of people, the best vehicle for passive income. And this is why, right? I mean, where else in this day and age in 2020 can you, in the middle of COVID or at the end of COVID, can you go to your boss in your 9 to 5, regardless of how good you are, regardless of how hard you've worked? When can you go to your boss and say, I would like a $7,000 pay rise this year? In fact, pay rises have been almost non-existent in Australia for like the last 5 or 7 years. Ever since the mining boom finished, the wage growth in this country has been abysmal. You almost needed to change careers or get a huge promotion in order to get a pay rise, but not everyone is in those kinds of careers where you get a promotion every single year. But everyone who has a job, everyone who has $30,000 to $40,000 of deposit or equity can buy an investment property and guarantee themselves a pay rise. Of course, it's not going to be huge when you start. I'm not going to spruik that you're going to get a $7,000 pay rise in the first year or first 2 years or first 3 years of your property investment journey. You just don't have enough assets under your belt. But as you start to compound assets, as you start to control more equity, control more land, control more buildings, then every time you increase your rent by $10, $20, $25 across 6 properties, 7 properties, 8 properties, 9 properties, that starts to add up. And that's the power of compounding assets. When you have more and more assets that you control, slight improvements to each one has a huge compounding effect on your passive income. Okay, and of course, when you make income, you got to pay tax. That's the harsh reality. But you can structure it in a way to minimize that. And I should have done that better. Actually, I'm not great at the tax side of things, or at least wasn't when I started buying all these properties. Okay, so that is how you increase your passive income every single year through property investing. And I know you're thinking, is this a good time to buy property, right? And this isn't going to be the subject of this video, but I do want to leave you with about 4 to 5 data points to convince you, hopefully, that this is the right time to buy property. Okay, number 1, rents are rising. There's no doubt about it. I just mentioned it. Regardless of which city you're in, regardless of which local government area you're in, almost everywhere across Australia, provided you've bought the right asset type, rents are rising. Okay, when rents rise, capital growth doesn't necessarily happen, like most people say, but there is definitely pressure on asset values to rise. Whether that happens or not is very determined or dictated by a whole bunch of other things, but certainly when rents rise, asset values don't fall. That's number 1. The second thing is CoreLogic's mortgage index. That has started to pick up. What that means is, for the first time in about 3 to 4 years, every month, more and more people are getting out home loans to buy property, whether it's downsizers, upsizers, first home buyers, or investors. Investors that are a little bit shy still, but they are starting to tick up. So if you're thinking no one's investing in property, you're actually in the minority, because the data says that more and more people are investing in property and buying property. That's the reality. The third thing is, everyone thinks that in March there's going to be a fiscal cliff when all these bank holidays, you know how they gave everyone a 6-month relief on paying back their principal and interest loans? Actually, there's not going to be a March cliff, okay? And the reason for that is more than 70%, don't quote me, I think it's more than 80 or more than 70%, more than 70% of people who chose to defer their loan repayments for 6 months in the midst of COVID have already started to pay those back. Okay, so they're not even waiting for March, they're not even waiting to be forced to do it, they're already doing it off their own back, voluntarily, without any compulsion. So if the vast majority of people are already paying their loans back, then where's the March cliff? There is no fiscal cliff, okay? The fourth data point that's interesting, what is the fourth data point that's interesting? It's that more than 70% of jobs that were lost due to COVID are now back. More than 70% of jobs that were lost due to COVID are now back. And I know that if you've been personally affected or if your family or friends have been affected, then it can seem like, you know, that's not the case. You know, we're still looking for work, and that's real. You know, we can't ignore that. But the reality also is that statistically, more than 70% of jobs are back. And there's no way that I can foresee anyway that we will go back into that March, April type of scene or climate where the economy just collapses again, especially with the vaccine coming at some point. But even without the vaccine, Australia truly is the lucky country. We're well ahead of the pack globally in our economic recovery. So that's the fourth thing. And the fifth reason why you actually should buy property now instead of wait, and this is the most impelling, or this is the one that creates the biggest burning platform. It's as simple as this: property prices are rising. Whether you look at Tasmania, whether you look at Adelaide, whether you look at Sydney, whether you look at Newcastle, whether you look at Brisbane, whether you look at Darwin, or finally when you look at Perth, I don't know about Alice Springs, but every single place around Australia, on an aggregate basis, property prices are increasing. Now, of course, this isn't the 2015 boom. You can't just put a blindfold on and buy willy-nilly. But the point here is that if you're still listening to the media and you're thinking that this is not a good time to buy property, the reality is that these 5 data points are saying otherwise. But tell me what you think. Do you believe these 5 data points? Do you think there's other things that we need to be considering? Of course there is, but tell me what those are. Comment right below what your opinion is. Is this a good time to buy property? Yes. Or is this not a good time to buy property? Leave a no. Okay, you're more than welcome to disagree with me. I'm just going by these high-level aggregate data points. We never buy based on these high-level data points because regardless of what the situation, there are always suburbs where you can make money. Right? We've made money all the way through COVID, but in general, on an aggregate average, point of view or perspective, property prices are increasing. So these 5 data points are pretty, I think they're pretty convincing, or at least they are to me. But tell me what you think. Are you convinced or are you unconvinced? Leave a comment down below. And once again, my name is PK. And if you would like to learn about how to invest in property seriously, make a passive income and get that passive income to increase every single year, just the way I described at the start of this video, I'll leave a comment below and you can learn more. All right, guys, we'll have a fantastic day, and leave a like or love so more people can reach this. The algorithm from Facebook, YouTube, Instagram, all this sort of stuff will put it out onto more people's feeds. Hopefully this was valuable. Thank you so much for watching. Catch you later. Bye.